In the world of business, the headlines tell stories of billion-dollar deals and overnight success. But beneath the surface lies a hidden formula, one that moves capital, mitigates risk, and transforms mistakes into lessons. This is not about luck. This is about the invisible rules that govern how the ultra-wealthy think, act, and grow. Today, we uncover the financial architecture behind billionaire businesses and the lessons you can take from them. Every billionaire business begins with capital, but not always their own. Early funding often comes from a precise mix of personal savings, angel investors, and debt leverage. Understanding how capital moves is the first step in seeing the formula in action. When Jeff Bezos launched Amazon, he leveraged early investments from family and angel investors to validate the business model before tapping venture capital. Elon Musk did the same with Tesla and SpaceX, turning calculated risks into scalable ventures. The lesson? Wealth multiplies not just by earning, but by strategically moving capital where it compounds fastest. But capital without strategy is dangerous. Billionaires understand leverage, not just financial, but psychological. Investor psychology dictates how funding rounds, acquisitions, and market timing work. Consider the dot-com bubble. Many fortunes were lost because founders overestimated demand and underestimated market behavior. Those who survived had the discipline to read beyond numbers. They understood the psychology of investors and the emotional tides of markets. Mistakes were expensive, but the insight they gained became a blueprint for scaling with precision. Behind every billionaire, there is a trail of missteps. Bill Gates' first software ventures failed before Microsoft became a household name. Warren Buffett's first partnership lost capital, but the lessons in valuation, patience, and discipline proved invaluable. Mistakes are rarely random. They expose weak points in systems, reveal hidden risks, and force entrepreneurs to evolve. Every billionaire embeds these lessons into a self-reinforcing cycle. Test, fail, analyze, optimize.
Scalability is the multiplier. A business can survive on ingenuity, but it thrives on systems. Billionaires build enterprises as if designing a machine. Each process measured, each output optimized. Amazon didn't just sell books. It designed a logistics and fulfillment empire that became a competitive moat. Jeff Bezos' insight wasn't the product. It was the system that allowed the product to scale globally with minimal friction. The lesson is clear. Build structures that outlive your daily effort. Generating wealth is one challenge. Preserving it is another. Global billionaires diversify across industries, geographies, and asset classes. From offshore accounts to emerging market ventures, they spread capital to reduce exposure while capturing opportunity. They hedge against currency fluctuations, political risk, and economic cycles. Wealth isn't just about accumulation. It's about foresight and protection. The lesson? Build a portfolio that mirrors the complexity of the world itself. Timing is invisible but decisive. Billionaires understand that markets reward patience and punish impulsiveness. Warren Buffett famously avoids the noise of short-term price movements, focusing instead on long-term intrinsic value. Markets are psychological engines. Those who succeed anticipate behavior, not just numbers. They buy when others fear and sell when others chase. This is less intuition, more disciplined observation, an acquired skill forged from decades of experience. Money alone cannot build empires. Leadership shapes vision into reality. Billionaires invest in people as much as in products. Elon Musk surrounds himself with engineers capable of thinking ahead of current limitations. Oprah Winfrey built an empire by amplifying trust and human connection. Influence is a multiplier. It accelerates growth, attracts capital, and turns ideas into movements. In every success story, people, not just numbers, are the secret asset. If we distill the formula, it looks simple, but execution is complex. 1. Move capital intelligently. 2. Treat mistakes as lessons, not failures. 3. Build scalable systems. 4. Diversify globally. 5. Observe markets and human behavior. 6. Invest in people and leadership. Every billionaire follows these principles unconsciously, iterating until wealth is not just made, but sustained. Ultimately, wealth is a psychological game. Patience, foresight, emotional control. They outweigh intelligence alone. Capital flows to those who understand not only how to make money, but how to navigate human behavior, systems, and timing. This is why the richest rarely panic, and why their mistakes often become the stepping stones for even greater success. Most people believe money is the goal. Billionaires understand something different. Money is only a signal. It reflects value created, risks taken, and systems built. When wealth is chased directly, it often disappears. When value is engineered, wealth follows quietly. The billionaire formula begins by detaching emotion from currency. Money becomes a tool, not an identity. Opportunity looks invisible to the untrained eye. Billionaires are not smarter. They are structured differently. They scan inefficiencies. They observe friction. They ask where time, capital, and demand misalign. Before Airbnb, unused bedrooms were ignored assets. Before Uber, idle cars were wasted capital. Billionaires don't invent demand. They unlock dormant value. Average investors use one layer of money. Billionaires stack capital. They combine equity, debt, cash flow, partnerships, leverage. Real estate developers use banks. Banks use deposits. Funds use investors. The formula is not owning everything. It is controlling outcomes with minimal personal exposure. Risk is redistributed. Control is retained. Billionaires avoid symmetrical risk. They prefer asymmetry. Small downside, massive upside. Venture capital works this way. 10 investments fail. 1 changes everything. Elon Musk risked capital, not comfort. Jeff Bezos risked reputation, not survival. Asymmetric thinking transforms probability into power. Even billionaires lose. The difference is how they lose. They document errors. They redesign systems. They exit emotionally before exiting financially. The 2008 crash destroyed over-leveraged empires. Those who survived reduced exposure, increased liquidity, and rebuilt stronger structures. Loss becomes research. Liquidity is quiet power. It allows movement when others freeze. It allows buying when others sell. It allows survival when others panic. Billionaires rarely stay fully invested. Cash is not laziness. cash is positioning. Markets reward speed. Wealth rewards patience. Billionaires operate on time arbitrage. They invest in today what others only value tomorrow. Warren Buffett waits decades. Private equity locks capital for years. Time becomes leverage. While others chase quarters, billionaires compound decades. Public data creates average returns. Private insight creates exceptional ones. Billionaires invest in intelligence, market research, political risk, consumer behavior, regulatory foresight. Information is not speed. It is clarity. The earlier you understand change, the cheaper opportunity becomes. Competition destroys fragile businesses. Billionaires build moats. Moats are advantages others can't cross easily. Network effects, brand trust, supply chains, patents, distribution. Amazon's moat is logistics. Google's moat is data. Coca-Cola's moat is psychology. Wealth survives when protected. Most people attach ego to money. Billionaires detach identity from net worth. They remain flexible. They adapt without fear. They rebuild without shame. Money becomes a process, not a personality. This is why they recover faster than they rise. The billionaire formula is not mysterious. It is disciplined. It moves capital. It respects time. It studies psychology. It protects downside. It amplifies upside. Wealth is not built in moments. It is engineered in systems. And those who master systems master capital itself. The headlines tell the story of money. The reality tells the story of thought, strategy, and discipline. The billionaire formula isn't a secret. It's a method, hidden in plain sight. Study it, respect it, and perhaps you can apply it. Not for fame, but for mastery of capital and time. If this changed how you see money, subscribe. These documentaries are built for thinkers, not spectators. And if you're serious about mastering capital, watch the next video on your screen.